Hello and welcome to MNO.TO Investment. This analysis is for Meridian Mining on the Toronto Stock Exchange as of 16th of August 2026 with a share price of $1 CAD 65. The full report is on MNO.TO.ca. Gate 1 fires on a going concern material uncertainty, and Gate 4 on share count above 5% for 4 consecutive years, capping medium and long from strong buy to hold. Take the good news first because there is a lot of it. Every pillar score rose or held, timing up 22 points, quality up 7, drivers up 6, valuation up 1. The technical trigger, the last report named, a reclaim of the 20 and 50-day averages on volume, was met on the 7th of August at $1.70 on more than twice the 20-day average volume, and price has held above the 50-day since. In August, the company reported stacked metal layers below one of its deposits, and the half-year accounts showed $96 million of cash and no debt, materially more than this desk had been carrying, worth about 12 Canadian cents a share. The same accounts that carried the cash also carried a going concern material uncertainty, which is a stated trigger of the financial distress gate. And the share count has grown by more than 5% for 4 consecutive years, which is a stated trigger of the dilution gate. An earlier draft of this report recorded both as cautions, arguing that the going concern language is standing rather than new and that the placings were struck at a fair price, so no value moved away from holders. An independent audit rejected both arguments, and it was right to. Neither gate contains a newness test or a fair price test. Where this framework wants an exemption, it writes one explicitly, and it wrote none into these two. Those arguments were authored, not framework, and they are withdrawn. Now our own record, and we checked it against the files rather than recalling it. The 2 April reports each carried a going concern gate row and rated it clear, describing a clean balance sheet. That is an affirmative wrong call, not an omission, though both predate the board's approval of the full-year accounts. The 5 reports from mid-June to the end of July did not mention the gate at all, and those are the genuine omissions. Add them up and 9 prior report months carried a buy or better signal that these gates should have capped. We would rather publish that count than let it sit quietly in an archive. The downside on a pre-production developer is not symmetrical with the upside, and it deserves the loud half of this report. The bear path is $1.15 at 20%, and it needs any two of the definitive study printing capex well above the study figure, the installation license slipping or returning with conditions, construction equity raised at a depressed price, so dilution lands nearer 40% than 20%, or the gold leg breaking, and gold is already below its 200-day average, while roughly 63% of this project's revenue is gold. That last one is a live near-term risk rather than a distant tail. Behind all of it sits the funding requirement. This company must raise around $248 million of construction capital, and if credit conditions tighten, the going concern, uncertainty hardens rather than clears. A holder following the exit rules would already be out at the stop of 130, well above the bear target. Now weigh the risk against the reward. The bull case is roughly 106% above today, the base case, the most likely, about 42%, and the bear case a fall of about 30%. So you are risking about 30 to make 106. So, our call on Meridian Mining, on the Toronto Stock Exchange. Hold on all 3 horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by MNO.TO Investment at MNO.TO.ca. The link to the full report is in the notes below. Have a great day.